Hey everyone, and welcome to this episode of Crushing Land. It's been a little while since we've done one of these, and it's something that we're going to get back into more. And we're going to shift focus a little bit on how these are done moving forward. We're going to talk a little bit more about very specific niche situations and where land investing is making sense. One of the things that we are personally noticing right now is a lot of people are dropping out of land investing, and a lot of that has to do with the shift in the market. A lot of people got involved, let's say in the last 5 years, and it was very easy to get deals, even at higher prices. I mean, the competition was there, but it was higher pricing. But people were still excited about them because they were very easy to sell, right? You just put it out there at market value and they were selling. And that's not happening as much anymore. And it involves more work, it involves more time, it involves more effort. And because of that, many people are starting to shift out of it. And one of the things we're trying to do is help you see that that doesn't need to be the case. It's not that you need to go into a different type of investing or different work or anything like that. It's more about just honing in your skills and changing them and changing your attitude, changing your mindset to be able to get into different things. So we're going to talk about that a little bit here in this video and then in all the other ones moving forward. So just wanted to jump on and say that here, and hopefully this helps you. And I'd love to get some feedback on this after you watch it. Let us know what you think. Tell us what you think about this particular video. Even if you're not going to use what we talk about in this video, because it's going to be very area specific, think about it from the perspective of, well, would this help me elsewhere? Because we'll add in more areas, we'll add in more nuances, we'll add in more of the other types of land investing that we are doing more with now, and all of those different things to help you see what's really working right now in today's market. So what we're going to be talking about right now is, in particular, the Florida real estate market, more centered around Orlando, the Orlando area. So, back in the past, Orlando real estate, it was basically focused around theme parks and vacation rentals. That was it, right? Well, that's not the case anymore. The metro area to Orlando has added over 100,000 residents in the last 3 years. Median home prices have jumped almost 50% since 2019. And vacant land growth in the quarters there is quietly outperforming rental properties for investors who know where to look. So in this video, what I'm doing is I'm breaking down the Orlando market from an investor's perspective, a land investor's perspective. What's actually generating returns right now, which neighborhoods makes sense for different strategies, and why vacant land deserves a serious look if you're trying to build a real estate portfolio there without all the landlord headaches. So we'll cover rental income potential, the real numbers on short-term rentals, tax advantages, the due diligence steps that matter in Central Florida. And again, whether you're looking at single family rentals, Airbnb properties, raw land and expansion areas, I will show you what to watch for and what to avoid in these areas. So if you're serious about building a real estate portfolio in Orlando or anywhere else, because again, we're going to talk about other areas and other things moving forward here, subscribe, as we're going to be focusing on investor-focused breakdowns that skip the hype, and we're basically showing you what works. So again, Orlando's median home price went up 48% in 4 years. That sounds great, right? Except most investors then are competing for the same rental properties, while vacant land parcels just about 20 miles out are selling for a fraction of that price, and they're flipping them faster and with better margins. So I'm going to walk you through what's actually working in the Orlando market right now. This is not the guru version, this is the real version. We'll cover rental income potential, short-term rental realities, the neighborhoods that make sense, and why vacant land in growth quarters is one of the most overlooked plays in Central Florida. And by the end, you'll know which strategy fits your capital and your risk tolerance, and what due diligence you can't skip if you're buying in Orange, Osceola, or Seminole County in particular. So why does Orlando work for investors right now? Well, let's start with the fundamentals. Again, Orlando added over 100,000 new residents between 2020 and 2023. That's not tourism, right? These are people that are moving to Orlando permanently. The job market isn't just hospitality anymore, right? You've got Lake Nona's medical city. You've got defense contractors there. You've got the University of Central Florida, UCF, spinning out these tech jobs, real demand from real people who need housing there. The rental vacancy rate sits around 5%, below the national average. Rent growth has averaged 4 to 6% annually over the last 5 years. Single family homes rent for $1,800 to $2,500 a month, depending on the neighborhood. That's not speculative, that's current market data. Now, here's where this gets interesting. Everyone's chasing the same rental properties. You're competing with other investors, institutions, and you're paying close to $390,000, $400,000 for a median price home. Again, we're talking about median price, not like in the higher end, things like that, but these are just like the ones that are in like these working class neighborhoods. Your cash flow after mortgage, taxes, insurance, and management, maybe $200 to $300 a month if you bought it well. And Florida's insurance costs have spiked, all right? So we'll get to that. But vacant land, well, you can buy a residential lot in a growth quarter for $30 to $50,000, $60,000. No tenants, no maintenance, no insurance headaches, just property taxes, which are maybe $400 or so a year. And you're holding an asset in the path of residential expansion. I've seen investors double their money in just a year, flipping land in East Orange County and along the 417 corridor in Osceola County. The key is understanding where growth is actually happening, not where it happened in the past. So let's talk about rental properties versus the vacant land strategy with that in mind. Let's compare the two strategies side by side because they work completely differently. Traditional rental properties, right? You're buying a single family home, maybe a duplex, you put 20 to 25% down. So on let's just say a $350,000 piece of property, that's $70,000 to $90,000 once you factor in closing costs and reserves and things like that. You're financing the rest. So your monthly payment with principal, interest, taxes, and insurance, PITI, right, runs around $2,500 to $2,800 a month at current rates. Well, let's say you rent that out for $2,200 to $2,500. So after vacancy, management, and maintenance, you're hopefully cash flowing at $200 to $500 a month. Well, that's fine. That is a real business, but you're managing tenants, you're dealing with turnover, you're fixing air conditioners in the middle of July, and if you bought in the wrong neighborhood or you overpaid, your cash flow is negative. What about short-term rentals? Because we're talking about Orlando. Airbnb near the theme parks, they can generate much more gross income. A 3-bedroom with a pool might pull $4,000, $5,000, $6,000 a month during peak season. But you're paying 20 to 30% of that to the management company. There's going to be higher utilities. There's going to be cleaning bills after every guest. You've got to deal with the local regulations. Orange County does allow short-term rentals in most areas. The city of Orlando restricts them to certain residential zones. Osceola County requires a business tax receipt and safety inspections, and some HOAs just ban them completely. So running these numbers conservatively, assume 65% occupancy, not 90%. The net cash flow often lands in the same range as the long-term rental, but with more volatility and more work. Now, let's jump to vacant land. You're buying a parcel for $30,000 to $50,000. No financing required if you're paying cash, or you can negotiate owner financing with the seller. Your holding costs are just property taxes, $300 to $600 a year. No tenants, no repairs, no insurance. You're targeting growth corridors, places where residential development is actually expanding. East Orange County, I mentioned that. The 417 corridor in Osceola County, Western Seminole County. You buy it at a discount. Maybe you hold it for a little while. So we're not talking about a quick flip necessarily, though it's still possible, but maybe you hold it for a while. And we're just talking about a little bit, 6, 12 months. Sell it to a builder, a developer, an individual buyer looking to build a custom home. I've seen these deals where investors bought at $40,000 and then they sold for $70,000 within a year. So that's a 75% return on a $40,000 investment with no operating costs. The trade-off here, well, there is one. There's no monthly cash flow unless you sell or finance it. The market does move slower. You're not listing it on Zillow and then getting 10 showings in a weekend. But you're also not competing with every other investor in Orlando, and you're not dealing with tenants at 11 o'clock at night because their hot water heater died. Let's talk neighborhoods a little bit. If you're buying rental properties, your best cash flow opportunities are in East Orange County, Avalon Park, Waterford Lakes, and parts of Osceola County. Median prices are lower than like Lake Nona and Winter Park. But rental demand is strong because of good schools and proximity to employment centers. You can still find single-family homes under $350,000 that rent for $200 to $2,400. All right. Lake Nona is where everyone wants to be. Medical city, master plan community, strong appreciation, but median prices are well over $500,000. Your cash flow is going to be tight unless you're putting down a huge down payment or banking on appreciation. That's fine if you're playing a long-term appreciation game, but don't expect those big monthly checks. For short-term rentals, focus within 10 to 15 miles of the theme parks. Okay, Champions Gate, Reunion, Windsor at West Side, parts of Kissimmee. These communities are built for vacation rentals, resort amenities, strong occupancy, established management companies. But again, verify the regulations before you close. Some HOAs have started restricting short-term rentals because of oversupply and the neighbors complaining. Now for vacant land, right? The best opportunities are in the expansion zone. So East Orange County, past Avalon Park, Osceola County, along the 417 corridor heading towards Poinciana, Western Seminole County. These areas are 20 to 30 miles from downtown, but that's where residential development is really starting to push. Master plan communities are breaking ground and builders need lots. So you're looking for parcel zone residential that have access to utilities or in areas where utilities are being extended. Lots between a quarter of an acre and 2 acres, depending on how far out you are. You want to avoid wetlands. You want to avoid parcels with no road access and avoid anything that's in a floodplain unless you know exactly what you're doing there. Generally, floodplains, again, we're staying away from. Not a flood zone, floodplain. What do we avoid across the board? We just mentioned flood zones. We don't avoid flood zones, but we will avoid anything in a higher FEMA flood zone without running the numbers first. You need to know that, right? Now, obviously, it's not an issue with vacant land, but it is going to impact the person that buys it, and they're going to care about that. So you just need to know what those numbers are to make sure it still makes sense. Because flood insurance can add $1,000 to $3,000 a year to your costs. So obviously, that's something you very much look at if you're buying a house, not so much if you're looking at land. Also looking at houses, older properties with older roofs, right? You might only qualify for Citizens Property Insurance, which is Florida's insurer of the last resort and costs are way more than private insurance. And any property in an HOA without reading the covenants first. Some HOAs cap the number of rentals allowed, some require board approval for tenants, some ban Airbnbs entirely, so you just want to know all that stuff. So let's talk about the due diligence that actually matters in all of this. Due diligence in Orlando is not the same as due diligence in, say, Ohio or Texas. You've got Florida-specific risks that you can't ignore. First, flood zones. We talked about that. So you want to pull the FEMA flood map for every property before you make an offer. If it's in a flood zone, get an insurance quote before you close. I've seen deals fall apart because the investor didn't realize flood insurance was going to cost $2,500 a year and kill their cash flow. Again, we're talking about homes here. A second in Florida, sinkholes. Central Florida sits on limestone. Sinkholes are real. Most title companies require sinkhole disclosure, and some lenders require sinkhole inspections. If you're buying an older property and you see foundations are cracking or settling, make sure to get it checked. A sinkhole claim on the property history can make it nearly impossible to insure it or resell it. Third, in your due diligence, your HOA and your deed restrictions. If you're buying in a deed restricted community, read the covenants. Confirm your intended use is allowed. I've seen investors buy properties assuming they could Airbnb them, only to find out the HOA banned that. And they also got rid of short-term rentals or limit them. So you want to make sure that you know that ahead of time. Now, for vacant land, due diligence is still critical, but it changes. In this case, you need to verify zoning, residential, agricultural, commercial, what is it? You want to confirm access to utilities. If there's no water or sewer, find out what it costs to bring them in, or whether the parcel that you're looking at is suitable for a well and septic tank. Check for wetlands. Wetland restrictions can often make a parcel completely unbuildable. And always have a title search and buy title insurance in this case. I've seen land parcels with unclear ownership, unpaid back taxes, easement issues. You don't want to buy a problem. And again, we're talking about actually owning it for a little bit here, not just doing a double close and a quick flip. You want to work with a title company that actually does land transactions regularly. We have ones in Florida we work with all the time, and we can mention those to you. Not every title company understands vacant land, at least the nuances. They understand how to do a title search. They understand how to close it, but you need to work with somebody that knows what to look for and has your back. Insurance is another big one down there. We've already talked about that. You want to get a quote before you closed on any improved property. In all honesty, Florida's insurance market is a mess right now. Rates have gone up 30 to 50% over the past 2 years. If you're modeling cash flow based on old insurance numbers, you're going to be upside down when you close. Now, if you're buying vacant land, understand that you don't need insurance, right? There's no building, so there's no insurance requirement. So that's one less cost eating into your returns. But that being said, you still want to know what that's going to be because it could affect your end buyer and how much they're willing to pay for the property if it's going to cost them substantial amount to insure whatever they're building. Now, here's one thing to remember in all this. Orlando works for investors right now, but the strategy you choose matters more than the market itself. Rental properties generate cash flow but require capital and management. Vacant land offers very low entry costs, less competition, and strong returns if you're targeting the right growth corridors like we spoke about. You want to make sure that your numbers are conservative. You want to run those numbers. You want to do real due diligence, and you don't want to chase appreciation without cash flow to back it up. If you're looking at Orlando or again any market and you want to understand how land flips into your portfolio, then drop a comment below and let me know which strategy you're leaning towards: rentals, short-term rentals, or land. And I'll respond to every comment that you put down there. And I just want to know what you guys are thinking. And if you want step-by-step systems for finding, evaluating, and closing land deals, then check out the link in the description. We work with investors who want to build real portfolios without the landlord headaches. So subscribe if you want more breakdowns like this. No hype, just what's working in real markets with real numbers. If there's some area that you would like me to break down, please let me know. Like I said, we're going to be more active with this type of information because we definitely see a trend where people are a little leery right now of the market. We've seen it before. We've lived through these market cycles. We understand it, and we want you to understand it as well. So everybody, thank you for joining us here on this episode of Crushing Land, and I'll catch you on the next one.